Hey everybody, my name's Andy, and I want to focus on returns. My channel is Finding Value, and if you guys are looking for investment opportunities, click subscribe. Definitely click subscribe. Help me out, share my videos with everybody. Watch, if you guys want to, you can watch the advertisements, as I do get paid more if you watch the advertisements, just an FYI. So we're going to look at returns here. Returns, what I'm going to do, I just noticed this, it's finding value, not value. What I'm looking for is, I made a comment that I spread my money out. I buy 15 companies in uranium, and someone says, well, why don't you just buy the ETF, URNM? And I want to show you something. I want to show you how bad I kill URNM with almost all the companies I own. It's very rare. I don't have many companies that are underperforming URNM. And I want to make this clear. If you can do a little bit of research and you buy some individual companies, you create your own mutual fund or own fund, however you want to call it, you can outperform the ETF substantially, not just a little bit. I'm talking wipe it. Like it doesn't even look like it's moving on some of these companies, dwarf the returns. I mean, Encore Energy, for example, is doing very well. A lot of these companies, I'm going to show you what the returns are in relationship to the ETFs and how underperforming the ETFs are in relationship to some of the companies that I'm picking. And you don't have to win on every single company, even though I kind of have been almost winning on every single company. You can win on a few that make so much money that it's worth looking at some of the individual companies. That's the takeaway here. So let's look at the returns here. I'm going to compare individual companies to what I think is an equivalent ETF. And you'll see the return differences. So here we go. This is Finding Value, the joke. So let's see how we're doing. I took some of my picks to see how they're performing against some of the ETFs. I have trouble basically finding a single company, at least that I chose, that's performing worse than the ETFs. Most are substantially outperforming, leading to a portfolio of individual stocks of handpicked, I'll call it a mutual fund of my own or a fund of my own. This is for financial educational purposes only. This is not advice, and you guys need to do your own research, your own due diligence, and figure out what companies and sectors fit within your strategic investment profile. How about that? So here's North Shore Global Uranium Mining ETF. North Shore Global Mining ETF is this blue line on the bottom here. I threw in some companies. I threw in Laramide, Goviax, and Bannerman. I chose just three random ones. Laramide's been a lagger, and so is Goviax. Those two have been lagging. My lagger companies that I've been loading up on recently are still beating URNM on a percentage basis. North Shore on a 1-year period is up 141%. I'm up 155 and 150 in my laggard companies and the ones that I've been accumulating recently. Bannerman's up 414. So that one is substantially outperforming. Now let's look at a couple of different other companies. Here is North Shore Global Uranium ETF right here in the blue. These are some of the ones that, well, these two I overweighted quite a bit. I own Deep Yellow. I own Encore Energy Corporation. That's up 600% in a year. This is up 300% in a year. And then I threw in Pure Point, a uranium exploration company. That's up 245%. All of these are drastically outperforming URNM. And I have FCUUF and XE. You can throw those in there, and those are also outperforming North Shore Global URNM. Now, here's a couple more. These are kind of my more speculative plays that I threw some money in. So I've got now North Shore Global is the one on the bottom. I've got Forsyth Metals. I think I bought it like in here, and then we've got a nice move there. We've got Forum Energy Metals, which is outperforming over a year, and we've got Sky Harbor Resources. Those are a couple other ones that I wanted to share. All beating URNM, and I own all these companies. Here is another one. We've got Standard Uranium, Canalaska Uranium, and Global Atomic Corporation that I own. Global Atomic is gone. Canalaska is doing very well. Actually, I think Canalaska might head lower here as we broke this kind of uptrend here. And then we've got Standard Uranium, which has been underperforming. And I'm just starting to buy Standard Uranium and cost average in here because of its underperformance. I'm gonna bet on the horse that isn't doing exceptional right now. So I'm putting a little bit of money in there and cost averaging in. They've got a lot of drilling going on this summer. Maybe they hit something big. So that's one I like. Here is some silver mining companies, and I just grabbed some silver miners, kind of my bigger ones. Endeavor Silver, First Majestic, and Mag Silver are 3 that I own, and I talk about a lot on the channel. Global X Silver Mining Company, they are vastly outperforming the Global X Mining ETF. This is SIL. You can see the performance differences quite dramatically here. Here is the silver junior miners that I have. We've got Discovery Metals in the yellow, Metallic Minerals in the blue, Impact Silver in the orange, and then SilJ in the dark blue. Impact Silver is below it. I've actually been cost averaging in a little bit there. And the Metallic Minerals is kind of in the middle. And then we've got Discovery Silver killing it up to 60%, which is one of my overweight companies. I overweighted Discovery Silver quite a bit. Here is Energy Select Spider Fund. Now, this thing is drastically underperforming these 3 up here. Now, these 3 are crazy, banshee. They do have a lot of debt. And I just from my experience with all the debt that some of these companies have, they can go ballistic to the upside when the price of oil goes up. Their profits go from like nothing to, you can't divide by 0. So basically, you're increasing their profits by infinity, and you're not going to get an infinite return, but they go up a lot. So SM Energy, Callon Petroleum, and Centennial Development Resources are these up here. I have all those. I also put one that is not leveraged as much. It's a lower risk play, Contango, which I still think can do exceptionally well. And that guy is still outperforming quite a bit. 36% on the Energy Select Service Fund or Select Spider Fund in a year. It's still up 67%. So that's good. Now here is the oil service ETFs. I own Transocean and I own a lot in Tetra Technologies. VanEck Vector's oil service is up 90%, Transocean 206, and Tetra is up 1,017 in 1 year. Go me. So that's what I've got. I wanted to share these comparisons so people realize that you can drastically outperform buying some of these individual companies versus an ETF. Now, would I chase my higher performers here? In some cases, yes. In some cases, no. I'm buying the laggards right now. I'm buying the stuff that's still down. That's what I do. I look for chart break patterns. I look for a sector to take off, and then I go, okay, what's lagging behind? I'll buy a little bit of that. I'll buy a little bit of that. I'm not overweighting those laggards. I overweighted those ones I really liked in the beginning. I said, I think these are leaders. I think they're the best companies. I'm going to overweight them and dump in. But some of these laggards could surprise. So I want to get a good spread amongst those, and hopefully, a couple of these explorers hit something that's really good for the portfolio, and hopefully you guys partake in some of this and it works out for you. That's the ultimate goal here for starting the channel, is that it works out for you guys. So if you guys have questions, put it in the comment section. Leave comments. I can do videos on it. I'm here to help you out. I'm here to ensure that everyone, and myself, is successful in this next commodity bull market. If you guys like this content, give me a thumbs up. And thank you for listening. This is Finding Value.